are, in fact, live. And Kathy Collins is joining us again from UMax Mortgage. How are you doing, Kathy?
Hi, good, Derek. Good to see you.
Great to have you as well. So, purchasing a home and not having a mortgage payment. Interesting idea, right? Most people would think, well, it's got to be cash. So I must be buying the home cash, right? I got to pay for the whole thing up front, no financing. That is not, in fact, true.
Yeah.
So what we're talking about today is a unique thing. You know, I always promise on the show to make you smarter than everyone else. Bottom line is, you listen to the show, I'm going to always be telling you things you probably never heard of before. This is definitely one of those things. I would venture to say maybe 1 or 2 out of 1,000 people even know that this is a possibility. And however, I would say much more than 1 or 2 out of 1,000 people could actually utilize something like this.
Yes, definitely. Definitely in this market, in San Diego in particular.
Especially in San Diego, or high-priced marketplaces all over California. There's a bunch of them where it's very difficult to, let's say, retire and say, all right, well, our dream is to retire in San Diego. Okay, well, you're going to need 600, 700, 800K to buy the house, not have a payment.
Yeah.
But with this particular program, which is the HECM Reverse Mortgage for Purchase,
Yes.
you can put down, let's say, a percentage and then not have a payment. Isn't that right, Kathy?
That's right. So you put down, just like you would with any purchase where you're going to have a mortgage, you're going to put down a certain percentage and you're going to have a mortgage for the rest of it. But the difference with this product from a traditional forward mortgage is that you don't have to make a payment on the portion that you're going to borrow. And so that's a game changer, because many times when people, even here in San Diego, where they have a home that's worth $800, $1 million, and they're coming out with 400, 500, 600,000, they can't go into the next property that they want to purchase because either they don't want to or don't qualify for a loan to make up the difference, and they can't find something. They can't find the house they want to live in for 400,000 or 500,000. So they don't want to sacrifice lifestyle. They'd rather stay in the home they're in, even though it may not be perfect. It may be too big. It may not be in the neighborhood or area that's close to their grandkids or their family. But they just remain in the property because they don't know they have this option to buy and not have a payment.
Yeah, especially for the downsizing, right?
Right.
Because you sell the house and let's say maybe maybe it wasn't paid off, maybe refinanced a couple times, and so the house wasn't paid off, but you retired and you have equity. You have 500,000, 600,000 equity. You didn't owe a ton on the home, but now to go downsize, you're either looking at a $500,000 or $600,000 home, or you go for the dream home, or you could, let's say you only want a $500,000 or $600,000 home. Instead of putting all of it into the mortgage, you could take and invest part of it, or use it for part of your retirement income. So it's very flexible.
Right.
That's the thing that's really impressive to me about this option, is this reverse for purchase option of being able to get a reverse mortgage, buy a home with a reverse mortgage. That's what we're talking about here. You're buying a home with a reverse mortgage. So when you purchase the home, you get a reverse mortgage from the very beginning. So you're only putting down a percentage, and then you're not making a payment. So now you've eliminated your mortgage payment, and you've freed up some funds potentially to invest in other things. Maybe it could be more real estate, or it could be the stock market, it could be whatever you want, or to play with, or to enjoy life, to travel the world.
Right. Right. Give away, you put to some charitable use. Some people are gifting some of that to their children now versus holding on to it and having it happen at the end of life. They take some of that money out and help the kids get into their place, or help the grandkids go to college, something like that. So
let's talk about the nuts and bolts a little bit, how this works. So let's say conceptually we've got you. Okay, you get it. Okay, I get it. I can get a reverse mortgage. When I purchase a home, you have to be 62 years or older. But you can get, you can do that. You can get the home. You don't have a payment. But how does it work? Like, what do I need to qualify? Where do I begin? How do we start down something like that?
So how you qualify is really based on just being able to pay the other expenses for the property. So you need to be able to pay the taxes and insurance on the new property, and any consumer debt that you might have. So if you have credit card debt or other consumer debt that is a monthly payment, then that's how you qualify. But it's not a ratio, so it's different than a traditional mortgage where there's a ratio. It's really got a cost of living cushion or calculation, and then your debt, and that's it. And you qualify at 100% of that, not a 43 or 35% like a traditional mortgage. So the qualification.
Would you say it's easier to qualify?
I think it's easier to qualify. It's definitely easier to qualify. And the other thing that you can do here in San Diego is if you've got an existing property and you can move your tax base. So if you bought your home back in the 70s or 80s or 90s, and you have a nice low tax base, and then you look at buying a new home for 800,000, 900,000, and you don't want to have that new tax base. You can move your existing tax base also,
Yeah.
which keeps your cost down.
Yeah, because if you qualify for a reverse mortgage, then you would qualify for that as well.
Yes.
Which, yeah, I know a lot of people who aren't selling their homes just because of that, because they don't qualify for the exclusion.
Uh-huh.
And so if they moved, it would cost them $300 or $400 a month just in taxes,
Right.
in additional costs,
Yeah.
which outweighs what they might save or, or adds to the payment threshold. So if you qualify for a reverse mortgage, you're 62 years or older, and you also qualify automatically for the tax-based transfer. And that is huge when it comes to ultimately, like downsizing. You're trying to do a couple things, right? You're trying to simplify.
Yeah.
You're trying to say, all right, here's the deal. I've made the most of the money I'm gonna make in this lifetime. Let's go ahead and try to be efficient with it. Let's not stay in this big house. Let's get into something that's more manageable, something that doesn't require us to do so much maintenance and cleaning and keeping up and all that, but also will free up funds for us to do the things that we want to do. And if you go about that, and this is where I think we really need to talk to the real estate community, because I don't think I know very few people walking the street know that this exists. But I also think, unfortunately, in the real estate business, very few real estate agents even know
True.
that this exists.
I find that, yeah, they don't know. It's not very widely used. It's a very small percentage of lending right now is the HECM for purchase. It's only been around since 2009, so part of it is education and getting the word out, and it's fairly new in the lending world, and so that's a part of it. And I think that it's also a little unfamiliar. So sometimes it's easier to go to what's familiar versus branching out into the little more creative or different options. So for agents who aren't familiar with it, it's a little safer to maybe just go with something that they know. And so
I guess you could technically, if you were downsizing and you had cash, and you could go and you could buy the home cash and you could refinance into a more traditional reverse mortgage and get the same end goal if you had the cash.
correct.
If you wanted to do that because you thought you were going to get a better deal for the cash or something like that, you could go that route.
Right.
And then just get a traditional reverse mortgage, essentially a refinance reverse mortgage on the new home, and then get the money out that way. But if you do the HECM for purchase, if you just do the reverse for purchase, then you kind of skip a step.
You do skip a step, and you save costs, because if you do the refinance, and I have people who come to me and they have that goal. We'd like to buy with cash, and then we'd like to reverse and be able to get some money to either have money in the bank or some of those other uses that we spoke about. And they're going to pay costs twice, because they're going to pay title and escrow fees for the close of their property, and then they're going to pay title and escrow fees for the refinance. So it makes more sense for sure to just do it right up front with the reverse for purchase versus doing a refinance later.
Yeah, just do it. Just do it once.
Yeah.
Yeah. And I think you can do that too if you're buying the home. You can show that, in your offer.
Yeah.
You think, well, the cash offer would be more beneficial. Well, show that you could write the check if you needed to.
Right, right. And the other thing that I get asked that question a lot, what's going to make it a strong offer? And because you are putting down 50 to 60% usually with the reverse, you've got a lot of skin in the game. So you've got a much larger down payment. Unless you're competing against all cash, it's going to be a very strong offer, because most people are not going to be putting down 50, 60%. So that is really helpful in this market, which is competitive, to be able to have that large down payment. Makes
100%.
the offer stand out.
Yep, and I could also see a lot of people using this program for, they're moving to San Diego, maybe from Arizona or somewhere else, and they kind of, lived over here, and all right, now it's time for us to go live our life.
Right.
Our kids are all grown up, they're all doing their own thing. We want to go to San Diego. We want to live near the beach, and that's what we want to do. Well, the house prices are a lot different in Arizona than they are here. So even if your house was totally paid off, in Arizona, let's say your $250,000 house was paid off, and you sell that, you get your proceeds, and say you have a couple $100,000, that's not going to get you a house in San Diego. It's just not.
No.
So you have to figure something else out. And this could potentially be one of those options where it's like, okay, well, you could do this, and not only would you be able to get into a home, but you would have no payment. So for people who be like, that doesn't make any sense. Like, how can I not have a payment? How can you get a loan for a home that you don't have to pay back? Can you help explain and answer that question for us?
Yes. So with the reverse mortgage, your payment is deferred, or interest is deferred onto the balance of the loan. So the principal balance of the loan is going to increase over time, versus where we write a check every month, we see the mortgage interest paid monthly, and we see the principal balance go down. This is going to be a situation where the interest is added. You can make a payment if you want to make a payment, but no payment is required. you do need to pay taxes and insurance. And those also can be added to the loan through what's called a voluntary LISA, or it's like a voluntary escrow. And so those can also be paid through the reverse mortgage as well.
So walk me through the timeline. Let's say this is perfect for me. Oh my gosh, this is what I've been waiting for. What do I do? How long does it take? And what are the steps?
Well, it's very similar again to a traditional forward mortgage. So the step is going to be to have the cash available to you, whether that's cash that you're going to take out of another asset, or if you're going to sell your existing home, have that ready. You're going to do your counseling. There is a third-party counseling requirement, and that counseling is to help explain the loan to you from someone that doesn't work for a bank and isn't trying to sell you a loan, but really is trying to just make sure that you understand the product and answer questions without the pressure of sales, I guess, from anybody. That counseling takes place, and then you make your offer. And the offer would indicate that it's going to be an FHA loan, because these are typically FHA loans. There is one product for jumbo, so that's great for here in San Diego. That's for loans up to $4 million. So that product's available also. But for the most part, these are going to be FHA loans. That would be indicated in the offer. You get an accepted offer and finish underwriting and fund in about 30 days, 20 to 30 days, so about the same time frame as a traditional mortgage, although those are speeding up in this market. We're seeing banks really step up, and I am seeing 10 and 15-day closings now in forward. We're not quite that tight in reverse yet, but competition will probably drive it that direction soon.
I was going to say, how long does it take? Can you still get a 30-day escrow?
Yes, yeah, 30 days. Mm-hmm.
Yeah, see, so I mean, that's plenty. Most of the time the sellers don't want to move any quicker than that. It's very rare that, because there's a lot of people on the forward side who are saying, we can close in 14 days, we can close in 21 days, but what seller is ready to go in that quick? Very rarely, unless it's a vacant property. Different story.
Right. Relocation. I had one in August that was a relocation. The property was empty. The couple had already moved to Seattle, and they wanted to close as soon as they had the offers. They were out of there. Yeah. So they wanted their money for their purchase in Seattle.
Yeah. That time in that situation, definitely the case.
Yeah.
But in most cases where someone's occupying the home, they're not really ready that fast. 30 days is plenty. Yeah. Is my point. So.
Yes.
So how long is that whole process from going through the counseling to doing the application up front? So, for example, if I call you today, how quickly can you tell me the stats? How quickly can you tell me, all right, this is what you would qualify for?
You can get qualified in about 24 hours. And even the conversation on the phone gives us a real good idea if you're going to qualify. I like to see the supporting documents just to make sure that we've got everything we're going to need for underwriting. And as soon as I have those, then you would know that you're qualified. Counseling, there's dozens and dozens of agencies. You do it over the phone, so you can usually do that within a day. So literally, you could decide this week that you wanted to do it and start making offers at the end of the week or over the weekend.
Okay, wow, that's amazing. That's super quick. Yeah. Tremendous. This is what I'm talking about. These are some of the secrets that are out there that I need you to know, because I want you to be smarter than everyone else. And the reality is, you can purchase a home and not have a mortgage payment. You have to be 62 years or older and qualify for this government-insured product. It's called HECM, reverse mortgage product for purchase. And don't have to use it for purchase. You can use it as a refinance, but it's an amazing opportunity if you're purchasing a home and you qualify to be able to not have to pay the home out in cash. You don't have to pay the entire amount in cash and then have no payment. You can do sometimes 40 or 50 or 60% down, and then by doing that, now you still have no payment. So you can use that money, that other money, to live it up, travel the world, give it to your kids, or for retirement income. There's a whole bunch of reasons why you might need the money, or why it may make sense not to put it in the home where it's just going to sit there and earn you 0%. So these are the kind of things I want to share with you. These are the ways I want to make you smarter than everyone else. Click the link below if you'd like more information from Kathy about exactly how you can find out whether or not it makes sense for you, for mom, for dad, for grandma, grandpa. Is this something they should be considering as far as their financial future is concerned? I think anyone who's over 62 needs to take a look at this, especially if you own a home or you're looking to buy one. And of course, that would all make sense for today's discussion. Kathy, thank you so much for your time. It's great to have you today.
Thanks.
Really appreciate it.
Thanks for having me.